Hello everyone. In this video, I am going to share with you the journey of the Indian share market since last Diwali. It has been a painful period for all the investors in Indian share market, but at the same time, it has taught a lot as well. So let's check out the performance. Before moving on, please read the entire disclaimer carefully. This video is for educational purpose only and there is no buy, hold or sell recommendation anywhere in this video. So let's start with the performance of the five broader indices of Indian share market. So the five broader indices are Nifty 50, Nifty Next 50, Nifty Mid Cap 100, Nifty Small Cap 250, and Nifty 500. Nifty 50 has given a return of 6.33% since last Diwali. Nifty Next 50 gave a negative return of minus 1.34. Nifty Mid Cap gave a return of 5.04. Nifty Small Cap minus 4.30 and Nifty 500 3.91. So the large cap space, basically the Nifty space, peaked out at around last week of September, whereas the small cap space peaked at around mid of November sometime. So that is the reason why small cap has given negative return and Nifty has given a positive return, although none of them has reached their all-time high till now. Okay. Let's now move on to the top 10 and worst 10 large cap companies since last Diwali. So these are the largest 100 listed companies by market cap in Indian share market. This graph shows that these are the 10 companies, the top 10 companies, whereas these are the worst 10 companies. Okay. So the best company in the large space cap is the Muthoot Finance. Muthoot Finance has given return of 70.81% since last Diwali. Next is Bajaj Finance with 59.42, Indian Bank with 58.85, Bharat Electron with 47.54, Eicher Motors 45.80, Adani Power with 41.07, Maruti Suzuki with 34.89, TVS Motors with 33.40, Interglobe Aviation, that is Indigo, with 29.25, and Eternal, that is Zomato, with 27.27% returns. The worst performing large cap companies are Adani Green with minus 39.55, followed by Trent with minus 36.87, ABB with minus 36.82, Siemens with minus 27.82, Tata Motors minus 26.75, followed by IT giants of TCS and Infosys with minus 26.10 and minus 21.15% returns. Varun Beverages minus 21.11, Samvardhan Motherson minus 20.42, and NTPC with minus 19.54%. There are few additions to this large cap space as well in the time since last Diwali. Hyundai Motor, Swiggy, Siemens Energy, Tata Capital, and LG Electronics. Okay, now let's move on to the top 10 and worst 10 mid cap companies. Mid cap companies are the companies that are the next 150 listed companies by market cap in Indian share market. So large cap are 1 to 100, mid cap are from 101 till 250. Okay, again the similar graph, these 10 are the top 10 companies, these 10 are the worst 10 companies. Okay, so the best mid cap company was Loris Labs with 97.88% returns. 197, that is Paytm, 79.83% returns. Fortis Health 79.67%, BSE 72.63, L&T Finance 69.52%, Authum Investment 69.25, Astra DM Health 67.69, GE Vernova TND 67.59, Godfrey Phillips 53.15, and JK Cements with 52.75% returns. The worst performing mid cap company was IndusInd Bank with minus 41.93% returns, followed by Thermax with minus 38.24, Torrent Power minus 33.70, Colgate Palmolive with minus 32.77, Central Bank minus 31.59, UCO Bank minus 31.15, Kalyan Jewelers minus 29.71, REC Limited, Rail Vikas, and Tube Investments. Again, there are few companies, new companies which have been added to the mid cap segment. Hexaware Tech, Vari Energies, NTPC Green, Vishal Megapart, ITC Hotels, HDB Financial Services, Anthem Biosciences, and Knowledge Reality. Okay, now let's move on to the small cap segment. These are the next 250 companies after these 250 companies. So 100 large cap, then 150 mid cap, that is 250. Now next 250 companies are called as the small cap companies. Now the best performing was RRP Semiconductor with, I don't know what to say, 12,796% returns. EliteCon with 3,849% returns. I do not know what they have done to gain so much, but anyways. Then is the Gabriel India with almost 200% returns, 198.82. Force Motors with 159.35. Acutas Chemicals 123.89. Lead Revenues 106.78. Manappuram Finance 95.98. Paradip Phosphates 94.47. Sirma 94.32. TSF Investments 91.05. Now, next 10 are the worst performing small cap companies. Vedant Fashion minus 48, AB Real Estate minus 46, Brainbees minus 45.11, Whirlpool India minus 42.21%, BSF India minus 41.80, Punjab and Sindh Bank minus 40.95%, Natco Pharma minus 39.30%, 5 Star minus 38.85, Finolex Cables minus 38.78, and finally Carborundum with minus 38.66% returns. And then there are a lot of companies which have been added into the small cap segment since last Diwali. So the list is over here. Some of them are Afcons, this is Shapurji Palunji Group Company, Niva Bupa, Black Bug, then we have NSDL, Urban Company, Vikram Solar, and so on. So there are a lot of companies which have been added in this segment. Okay, and once again, all this information is just for educational purpose. There is no buy, hold, or sell recommendation at all. Let's now look at the top five and worst five sectoral indices. So, how does the major sectors perform? So, we'll see the top five and worst five. These are the top five. These are the worst five. Okay. So, top sector was Nifty Financial Services X Bank with 19.67% returns, followed by Nifty PSU Bank with 15.92%, Nifty Financial Services 14.86%, Nifty Auto 14.2%, and Nifty Bank with 12.31. So you can see financial bank, four out of the five are with the finance segment. Okay, the worst performing Nifty FMCG with minus 4.77, Nifty Reality with minus 7.03, Nifty Energy with minus 10, Nifty IT with minus 12.71, and the worst of all the sectors was Nifty Media with minus 24.39% since last Diwali. Okay, so now finally let's have a look at the performance of the top 10 economies of the world since last Diwali. So let's see where India stands as compared to the top 10 companies of the world. So India is amongst the top 10 economies. Okay, so this is in descending order. So basically, this is the largest and this is the smallest in the top 10. Okay, so USA 12.95%, China 16.16%, Germany with 23.71%, India with 7.09%, Japan with 30.36%, extremely high returns from Japan, United Kingdom 13.44%, France with 13.42%, Italy again very good 26.87%, Canada with 18.59%, and finally Brazil almost 15%. So we are basically the worst performing economy since last Diwali. Okay. So we have a lot of ground to cover in the upcoming months. Okay. So the journey from Diwali to Diwali reminds us that the market is a marathon and not a sprint. With regulatory reforms focused on the transparency and key sectors poised for a cyclical upturn, the current market landscape offers both opportunity and the need for prudence. So the lesson for the past year is the value of quality and the importance of diversification. Okay, they are going to be the guides. You must have noticed the rise of gold and silver in the last 10, 12 odd months. Okay, so diversification is the key. That is, we all have to take care of. Okay, so that is all from my side in this video. Thanks for watching it, and please like, share, comment, and subscribe to the channel. Goodbye and happy investing.